Welcome to Momentum Monday. Today is March 14th, 2020. Howard, have you bought enough food?
Yeah, Alan's done a good job. Every day we hoard a little bit more. This is basically Momentum Monday Panic with Friends episode.
Panic Monday.
What about you? Are you hoarding anything?
Yeah, I mean, the past couple of weeks I bought just a bunch of pasta. That's just dry food. You know, I prepared before the panic. Kind of.
Well, nobody does social distancing better than Bulgarians.
I cannot talk about the rest, but I've been working from my home office since 2013. So you know,
I know you're hoarding away money. I think you've had a good run here. I'm not sure, but I can tell. Okay, so let's just pull up. There's not much to talk about because you know what? I'm a trend guy, and I just told you, like, I'm not all the mistakes that I've made, nibbling, whatever. I may have gotten lucky Friday, sold some stuff on the close. You know, Apple. Pull up Apple. I took some money off it, even though I'm not bearish on Apple. I'm going to use any rally until we get weeks of strength to sell anything really liquid, to just get my positions down to the 40-ish% equities, maybe 30 if we continue to just get stopped out of things. But I'm in a defensive position, and I don't love to be wrong at this point and see some signs of a real bottom. But to see President Trump, I guess, put out a tweet bragging about this rally tells me that nobody has worse market timing than him. He rode a good trend, and now is focused on the day-to-day movements of the stock market, which may be better than him focusing on anything else. But I think you got to be careful. And Apple looks better than 99% of the other stocks. So let's go back to the S&P.
Yeah, I agree. I mean, at some point last week on Thursday afternoon, the S&P was down 30% from its 52-week high, which was just a month ago. So it is. I mean, the only
go back to a monthly. There's no charts that really can.
The only similar correction that we had in terms of velocity was in 2000 when the Nasdaq went down about 30-35%.
Well, there was near the end of the bear market in 2008. Those 3 months in like September, October, November. Well, right.
Yeah, but I'm talking about from 52-week highs.
Oh, yeah. Usually you get a warning. So this may just be the warning. Listen, love for this to be the panic bottom. There was definitely some fear, and but there's just too much damage to the economy. Like, the next 2 weeks in the United States are going to be at a standstill. So anyways, love to be wrong. I think you got to err on the cautious side. So that chart is the S&P monthly.
Yeah, I mean, we tested the December 2018 lows in the aftermarket on Thursday.
Mm-hmm.
And the market gapped up a little bit on Friday, sold off in the morning, and then based on that conference, about 30 minutes before the market closed, we just had a humongous short covering rally.
Yep.
Yeah.
So, I mean, what's great is we're going to have a whole new trend one of these weeks or months. The retailers that survived this, the media companies that survived this, the technology companies that survived this, and not just survive, but thrive. But I think the industrials, I mean, all those buybacks, if we look at Boeing and we just look at the dumb, we knew they were dumb. There was thousands of arguments for years about buybacks and whether they matter or don't. But the cash that they wasted on buybacks now it has nothing to do with anything about share price. It has to do with having cash in a crisis. And it sure does look dumb to see those companies spend years buying back stock, which didn't end up supporting it, and now that cash is gone. So I don't, never trusted these companies. Now you can never trust these companies. And there's not enough witch hunts in the world that would make me care about these brands anymore, because they've let us down and we're going to have to bail them out in our 50s. So I think you got to stick with technology. You got to stick with very focused, lean companies. There's going to be a whole new change in how people think about brands, because they're going to find out they're going to be really let down by some major brands, the airlines, the hotel businesses. There's going to be a lot of witch hunts, and they may not be public witch hunts. They're just going to be people saying "fuck you" to brands that have been around for 50 years. So that's what's coming. And then we have to deal with the fact that technically the markets are broken right here, and that there was very little liquidity. So what are you doing?
So I still keep a large cash position, but last week I started nibbling for trades, and I did buy the S&P 500. Started buying on Wednesday, Thursday. Sold most of it on Friday, just to keep my profits, because in this market you need to be nimble. You need to, if you don't take your profits when you have them, they're going to disappear. I'm not saying there is 100% chance, but there is a, let's call it 30-40% chance that we are at the beginning stages of a year-long bear market.
Yeah. At least 60 days, if we can really get a hold of the panic, because you have to only go to the playbook, Italy and Korea and China. It's going to take 60 days. And then we, as a country, we're probably in worse shape than the other ones because we're bigger and more dense in certain areas. But the other issue being they can shut down the market. So if you take big positions and try and day trade and hold positions overnight, you may find yourself yelling at your computer, and you just have to be aware of these different. The rules don't really apply in a state of national emergency. Who knows?
Yeah, and the other trend that I'm currently nibbling on is shipping companies. Some of them, especially the crude oil carriers. Because
give me an example. Give me an example.
Yes, I'll give you an example. TNK. So currently the called VLCC rate, the very large crude carrier rate, is at multi-year highs. It went from something like 14,000 a day to 300,000 a day, just because Saudi Arabia is trying to rent out those ships and to store their cheap oil. So crude oil is currently in a super steep contango, which means that people expect 6 months from now the prices to be higher. So the producers and speculators that are buying crude oil now, they need somewhere to store it, and this is why some of those shipping companies are doing so well. And look what they did last week compared to the rest of the market when everything was selling off. They showed tremendous relative strength.
But they had fallen like 70%. So hang on,
And they're setting up for higher prices. And I'll give you a few other examples. It's just the entire industry. I've been nibbling on it. I mean, not big positions. I've been trading in and out of it. I still own some of them, and they're setting up for potential breakouts. I mean, there are no certainties in this market. Obviously, if the general market turns lower, they're going to sell off with the rest of the market. But just look at that relative strength. Look, they already have a relative strength of 98, so they're in the top 2%, many of them. So it's a potential trend to keep an eye on. It's a fundamental trend. It's not just
yeah, I mean, that's interesting. Wow, and, look at earnings, $7, you know.
I think also people should continue to pay attention to the coronavirus related stocks. I mean, everyone probably already owns Zoom or have heard about them. Probably the market rallies, they're going to pull back since it's been.
I think the money's been hiding out there like treasuries, but yeah, on any big pullback, they're going to be buys.
But also there's some companies that coronavirus related companies that are kind of setting up and acting well. And look at this company that makes protective clothing. I would assume that the demand for that will skyrocket.
Yeah, I got to put that on my screen. Hang on, I got to put that on my screen.
For multiple months. It's not going to be just for a couple months because no country was really prepared for that, and people are going to want to be more prepared for the future. So it's not going to be just governments, but it will be just private companies preparing better. And this is a company that actually, yes, the valuation is sky high right now, but it is a profitable company, and I would assume their sales will just skyrocket. And it is a company just to keep in mind.
Yeah, I added it to my watch list. Okay.
So Trump mentioned.
Yeah, it's mentioned at length in my podcast today with Jeff Richards, but well, that would have been a nice buy at 100, I guess.
Well, this stock has been on a tremendous trend for many years. It's not like it's a new trend, but
no, but there's very few public companies, and now we're off in a new direction. This will be a monster category in acquisitions.
Yeah, so Teladoc for sure. It should be.
Yeah, if people want to go to my blog today, Jeff Richards, he's investing in a lot of startups in this space as well from GGV Ventures. But this is the one where hedge funds are going to use this to put on their sheets. So the big dips are getting bought. I think that's an important one to look at. So even in a bear market, there's some stocks that you can.
Oh yeah, there'll be huge trades. I mean, if let's compare this event to, let's say, 9/11, which was kind of surprising. This event was also surprising for many.
But 9/11, the market was already weak.
Yes, it was super weak. It was already in basically the economy was in a recession. Yeah. But what I'm trying to say that from those ashes, we saw some humongous new trends. Companies like Teledyne and Taser. There were some companies that emerged from those bear markets, from that shocking bear market, and went up 10 times, 100 times after the bear market was down. And even during those bear markets, I remember I read that Panera, for example, it kept making new all-time highs in the 2000 when the market was crashing. So there will be some new trends that are going to emerge.
Panera just went $9 all-you-can-drink coffee all month. It's like movie phone of coffee. Pull up the stock.
We have to be. I think that they went private, Howard, a few years ago. Someone bought them. And we have to be thinking about the big trends right now. And for example, if education from home becomes more widespread, which I think it's might be likely, at least for the time being, maybe a company like Learn might be among the new leaders. I mean, yes, it's still below its 200-day, but look at the rally in the past 2 days. The huge.
Yeah. But that's probably a poorly run business based on how badly it had been doing. So is there ones that were doing well already, like Zoom? Yeah, it's got good earnings, so that's weird. But they seem to be all over the place.
What I'm saying is look at the past 2 days of accumulation.
Yeah.
If it goes above 25, they're more. It's going to appear on more people's accounts.
What's the weekly look like on that one, Ivan?
It's not looking that sexy, but I'm just pointing out trends.
No, it's not. It's not horrific.
Chug.
Yeah.
I mean, what I didn't like that on Friday they basically went down when the market rallied 10%. So that's a red flag. But
money had been hiding out there for some reason, like Zoom. So I wouldn't give up. I think these may be the counter trend. Money's hiding out there expecting this to have gone higher. And so then as money gets reallocated to the rallies, but this one is one to watch. If it holds in here and starts getting stronger, you're right. Chegg. I think Chegg and Zoom and Teladoc would seem to be the one.
40 to 40, 50 to interest me, but yes, definitely I'm watching it. And so these are the current big trends that I'm seeing. I'm sure there'll be many others that are going to emerge.
And then there's those brands that are on sale. Like I bought some Starbucks on Thursday. I don't really care for it, but I ended up selling half at the close on Friday. But the stock was down 40% in less than a month. What's that?
I mean, buying brands you love, it's It's
Yeah, but
amazing.
they're going to have more. It's not going to be so quick for them. They're going to struggle for 2-3 months at least. But you got to have your eyes open for brands that are very lean, very simple run businesses and aren't conglomerates that have to deal with lots of people, you know, in public places. And those are going to be some cultural change as the social. I mean, the president was actually tweeting the word social distancing today. I think people in the know have been talking about that for 3 weeks. For a guy who uses Twitter, he's not up to speed. It doesn't seem like he's up to speed on what the country is thinking about, or at least half the country.
Well, he's still shaking hands with people who are.
So the social distancing, Starbucks is not a social distancing stock. It's a social aggregation stock. And so that's why it was down 40%. So I think coming out of this crisis, we're going to have to deal, I think the safest portfolios are going to be social distancing companies that allow people at a distance, that can profit from people being at a distance. And it's not a guaranteed, you're going to see a lot of companies with that in their name. So it's going to be just an interesting experiment to see what's going on. I think, I think you gave some good ideas and sectors there, Ivan, but I think if we go back to the S&P, I would just tell people not to be a hero here. If this was the bottom, we are going to have, and that was all it is, and it was just a nasty correction, there's going to be so much time to make money. And if this is going on for a year, you've got to be really patient, because a year is a long time in the stock market. You know, with the market open every day, you got to learn to just watch it and not buy it. So we'll check back in next week. Have a good weekend.
All right.